Good morning, good afternoon, and good evening. Thank you for joining this webinar on Turkey economy, banking outlook, and COP31 vision. I am Mig Moreno. I'm Deputy Secretary Treasurer of the Asian Bankers Association. I'm glad to today introduce two expert speakers that will discuss the current situation in the banking sector, the economy, on Turkey. Turkey is a very important regional power in that area. On one side, Europe, on one Asia, and on the north, Russia, and many stand countries in the neighborhood. So what happened in Turkey have an impact that is important to consider and to measure. For that reason, we have one economist who is quite good on the numbers, because I saw the presentation yesterday and we have a very good conversation about it. This presentation on the economy would be done by Ümit Ünsal, who is not new to ABA. Many years ago, we worked together also on a presentation on Turkey. He holds a Bachelor of Science in Economy. He started his career doing statistics in 2005. So we have 21 years of statistical work with him. And then around 2014, he joined the Bankers Association of Turkey, where he has been continuing his research in the economy. He's currently the coordinator of research, statistics, and sustainability in the association. Now, the second part will be shorter. That's what we will dedicate to COP31. This one is also done by another specialist or an expert. Elif Berna İlhan has a bachelor degree in environmental science in engineering, and she's a project engineer in environmental infrastructure projects, and for many years has been working. In the past, she worked for Ernst & Young, Turkey, and in the last few years, she has been working in the association, supporting this transition from the environmental policies into the banking sector. You need an engineer to have these kind of measures and tables so banks can understand how to do this implementation. She is in charge of sustainability reporting, climate-related regulations, and industry-wide initiative. So she has a hands-on approach to these policies inside the banks. And that's the reason why she's here. With these two things already in mind, we will start with the first part of a webinar on Turkey's economy. And now I will pass the control to Ümit Ünsal, who will do his part. And after that, İlhan do his shorter presentation. And at the end of the webinar, we will have a Q&A discussion. So please issue your questions in the Q&A box so that we can discuss these issues. Please pay attention to the numbers, are quite good.
Good morning, good afternoon, and good evening for everybody. It is great pleasure to be with you, and I would like to thank the Asian Bankers Association for providing us with this opportunity to share our perspective on the Turkish economy and the banking sector. We are meeting at the time when the global economic and financial environment continues to shaped by profound change. Geopolitical tensions, shift in global trade patterns, persistent uncertainties, green transition, and digital technologies all are transforming the environment in which the banks operate. For emerging economies in particular, navigating this environment requires resilience, flexibility, and sound financial structure. Turkey is an interesting case in this respect. Our diversified economy, young and dynamic population, strong industrial base, and strategic position between Europe, Asia, and Middle East, and the Turkish economy and Turkish financial system deeply integrated with international markets and global economy. At the same time, Turkish economy has experienced the significant adjustment in recent years. I will give some numbers about it, and I will give some details about it. The authorities have been pursuing policies aimed at reducing inflation, strengthening external balance. This process creates important opportunities for establishing for sustainable and predictable economic framework. It is for the medium term. Through the different economic cycles we experienced recent years, one of the key strengths of Turkish economies are the banking sector. Turkey has a well-established, highly regulated, and technologically advanced banking sector. Turkish banks have considerable experience in operating under changing economic and financial conditions. Thanks to their risk management, very good risk management, the banking sector is in very good position in this situation. Also, the banking sector plays central role of financing real economy and contributing to Turkey's green and digital transformation. After my presentation, Mr. Berna İlhan gave some details about Turkish banking sector and Turkish economy grand transition. What's the role in our green transition? Looking ahead, we believe that international cooperation is a very important role in this persistent uncertainties. The Asia in particular represents a region of increasing importance for Turkey, not only in terms of trade and investment, but also in banking and financial cooperation. The growing economic links between Asia and Turkish economy provide lots of opportunities our financial sector. In today's presentation, I would like to provide with overview the Turkish economy before the banking sector, main trends and main framework that the Turkish banking sector is positioned within the changing environment. I hope that today's discussion will provide useful perspective on both challenges and opportunities, and to further strengthen the dialogue between Turkish and Asian banking communities. Thank you again for your kind invitation and for your attention. Let me begin my presentation and brief overview and Turkish economy. The growth, real terms, the Turkish economy first quarter of 2026, 2.5%. When you look at the graph in the left side, the Turkish economy lost some pace in our growth rate because of the tighter monetary policy. The main contributor of the Turkish economic growth is private consumption. In the recent data shows that the private consumption contribution to the growth rate 3.4%. And the public consumption is very limited role on our growth performance. Also, net exports affects our growth rate negatively in recent years. Investments also have positive impact on our growth pattern. The investment is very important for Turkish economy, not only for the recent data, it affects our near future growth rate. Our two main things affect our growth pattern in the recent years. One of them is disinflationary process. Second one is geopolitical and external shocks that we experienced recent years. I will mention about our inflation pattern and also our monetary policy that very important role on Turkish economic growth. When we look at the long-term period, the potential growth rates for Turkish economy almost 4.5%, between 4.5% and 5%. When we look at the recent 2 or 3 years, the Turkish economy experienced under their potential growth rate because of the disinflationary process. We need to balance our growth pattern. The Minister of Finance always says that we need to more balanced growth pattern in the Turkish economy is very important. Both domestic consumption and external consumption should be more balanced in the Turkish economy. Our main indicator for our macroprudential policy framework. The inflation is the main issue for Turkish economy in recent years. Before 2024, our CPI rate almost reached to 70% and 80% this year. This is very high level when we compare to our recent 10 years period. We experienced very high inflation rate. After that, let me share monetary policy rate in this period. We macroprudential policies and monetary policy tightens all the financial condition in Turkish economy. Our central bank's policy rate reached to 50% in this high inflation rate at the end of the 2024. After that, we experienced some decrease in our inflation rate, both core CPI and main CPI rate. After that, the central banks lower our policy rate. The recent policy rate in Turkey, 38%, but second quarter of this year, central banks, the average funding cost is higher than our policy rate because of the external condition. Iran wars and higher energy prices badly affect our inflation. The central banks didn't choose the higher policy rate, but average funding cost in the banking sector is almost 40% because of the external condition. Rising geopolitical risk, financial uncertainties, and global scales, the central banks rise and their funding cost. Also, the CBRT primary policy tool is policy rate, but the most important supporting policy tool for the Central Bank of Turkey is reserve requirement ratio. Because of the controlling the liquidity condition, the central bank used the reserve requirement ratio. It is another important monetary policy tools in Turkey. Because of the external inflow, capital inflow for Turkish economy, the central banks control the liquidity position and use the reserve requirement ratio. The higher TL and FX reserve requirement ratio, because of the things, the banking sector experienced more tighter financial condition. Also, we have another important policy tools in Turkey, especially used for monetary policy and this inflationary process that affects our banking sector closely. One of them is credit growth limit. Central banks give some limits for the banking sector. If you are not an investor in Turkish economy, you have the credit growth limit. So the banking sector very badly affected in this process, but it's used for this inflationary process. Also, another macroprudential tools that used by the Central Bank of Turkey is TL deposit ratio. The dollarization is the main subject of the policy framework for Turkish Central Bank. The dollarization is very high when we experience inflation rate. In this period, TL deposit, the total deposit ratio in Turkish banking sector almost goes 35%. It's a very bad situation for the central banks of Turkey. After that, because of the tighter monetary policy and the TL target for the banking sector, all the banks have target for TL deposit ratio to total deposit ratio. Because of the Central Bank of Turkey, if couldn't reach this target, the bank sector, they should pay another money to the central bank. Also, it affects the banking sector funding cost. So when we talked about after this Turkish economy slides, when we talked about the Turkish banking sector data, their balance sheet and profitability data, we will show some clue because of this macroprudential measurement that used by Central Bank of Turkey. Another important things for Turkish central banks, strengthening reserves is also important policy objective for CBRT. Strong reserve management is crucial against vulnerabilities originating by domestically and internationally. Over the past 3 years, both gross and net reserves have seen strong increase in Turkish economy. Thus, in 2025, the gross reserves rise to almost $200 billion. Also, the gold reserve very important role in central banks reserve. In the both, with a lot of central banks, Turkish central banks strengthen their gold reserves. And in this process, in the first quarter of the 2026, the gold price affect Turkish banking sector total gross reserves. And now after the lower uncertainties in global markets and high capital inflows for Turkish economy, we have again strong reserve. Also, central bank reserve requirement ratio that's used by IMF, for example, reserve to import ratio, reserve to short-term debt ratio, to Turkish economy is better condition when we compare to the previous years. Another two important issue about the Turkish economy. One of them is budget balance and the another one is current account balance to GDP ratio. In 2023, Turkish economy experienced very deep and unfortunately big earthquake. Also, this is affect our fiscal condition of Turkish economy. After 2000, the Turkish economy's the main strong side is fiscal discipline. Our budget deficit to GDP ratio almost under 3% recent years. After the earthquake, lower growth rate, we experienced a higher budget deficit to GDP ratio. Our budget deficit to GDP ratio in 2023 reached to the 5%. After that, the more fiscal discipline give us lower budget deficit to GDP ratio. After the effect of the earthquake, we turn back our historical averages in budget balance. And the recent data shows that budget deficit to GDP ratio in Turkey almost 2.2%. It is very close our target in medium-term economic program. The current account balance is very important for Turkish economy again. When the Turkey experienced very high level of growth rate, unfortunately, we experienced current account deficit to GDP ratio deteriorate. 2022, our growth rate is very high and current account balance to GDP ratio almost reached the 5%. After that, our policy framework focused on the external balance and our current account balance to GDP ratio under the 1%. The recent years, because of energy prices, deterioration in our current account to deficit, current account deficit to GDP ratio, and we are manageable area now. 2.2%, 2.5% is not bad for Turkish economy. Also, in recent years, we experience in structural things for the current account balance. One of them is energy side. Our renewable energy usage is very high when we compare to the previous years and when we compare to the another countries. Our recent data shows that for Turkish economy, energy consumptions, 55% comes from renewable energy. So we are oil importer countries. Higher oil price shut our economy via current accounts balance. The renewable energies share in the consumption is very good news for Turkish economy. The debt ratio is very good for Turkish economy when we compare to the another developed and developing country. Both household, real sector, and government and financial institution debt to GDP ratio is very low when we compare to the developing countries and developed countries. Especially in household debt to GDP ratio, almost 10%. It's very low. Also, real sector is again 38% when we compare to the another countries. It's very low. Also, government debt to GDP ratio is very low. It gives very flexibility to policy framework. It's very good news for Turkish economy. In the last recent years, some rising in debt to GDP ratio, both real sector and financial institution, but we are now very good condition in this area. We talk about the main framework of Turkish economy. The main problem is inflationary process. It is very important for Turkish economies and both Turkish banking sector. We talk later about what kind of effects that come from the inflation and this inflationary process for the banking sector, balance sheet and profitability issue. I think we can start with the banking sector. First of all, I will give some structural information about the Turkish banking sector. After that, we will look at our balance sheet. After that, we will talk about profit and capital adequacy ratio, something like that. Turkish banking sector total asset to GDP ratio almost 75% in recent data shows that. When we compare to the 10 years before, we experienced decrease in our asset to GDP ratio because of higher inflation rate and very strong macroprudential measurement that affects the Turkish banking sector. When we compare to total asset to GDP ratio, we are very close to the developing countries, but we are asset to GDP ratio when we compare to the developed country. It's also show potential for Turkish banking sector. As of June 2026, almost 68 banks operate in Turkey. Also, deposit banks is the main actor of our banking sector. Their asset share almost 84%. Also, state banks almost 40% asset share in Turkish banking sector, private bank 28, and foreign bank 20% share of in Turkish banking sector. In Turkey, we have two banking associations. One of them is the Bank Association of Turkey. We have 58 members. All the banks in Turkey have to be our members because of the banking law. Also, the second banking association, the Participation Bank Association of Turkey. 10 participation banks consist of almost 92% of total asset share of the banking sector. Almost 9% comes from the participation banks in Turkey. Also, we have established new 6 digital bank. They don't have any branches, but they new participants our banking sector. Also, banking sector 11,000 branches in the Turkey. The recent years, the flat path for the branches, both technological development and remote consumer acceptance helps the branches. The banks needs lower branches for Turkey, but Turkey have very big country and population almost 86 million people. So always we need the banking branches. 11,000 branches operates in Turkey. When we look at the employees, almost 200,000 people works for the banks in Turkey. The banking sector have very well educated employers. Also, the women almost 51.5%. We are proud of this women's participation in working for the Turkish banking sector. Banking Regulation and Supervision Agency is the main authority for banking sector. All the banking law, Basel regulation, operated by BRSA. Also, BRSA supervised the banking sector. Capital Market Board regulates the capital market companies. Also, insurance companies and insurance pension funds, they have their own regulation and supervision agency. Payment system regulated by Central Bank of Turkey. Also, AML, CFT, and compliance issues regulated and supervised by Ministry of Finance, that used by MASAK, we called it. The main regulatory and supervisory framework that shows this graph. We can talk about the main balance sheet items of the Turkish banking sector. The asset size of the banking sector is 1.1 trillion US dollar. When we look at the liability side, 60% of our liabilities come from deposit. Also, non-deposit funds share of 20%. Also, shareholders' equity, our liabilities, and 10%. What will do this money? Almost half of the assets goes to the loans. Also, 15% of our liabilities goes to the securities. That almost goes to the government securities. Liquid asset size almost and 15% again. The growth rate and deposit annually perspective, we experience some decrease in our growth rate, both loans and deposit. But both deposit and loans growth rate above our inflation rate. Because of the growth limitation affects our loans growth. Also, deposit side, when we look at the deposit side, the central banks TL deposit, the total deposit ratio target, very important role for the Turkish banking sector's deposit share. In the Turkish banking sector, TL deposit, total deposit ratio almost 61%. It is very good numbers when we compare to the previous years. It is very close to the long-term average. The breakdown of the loans, when we look at the breakdowns also, the corporate loans is the main items of our loans. But when we look at the distribution of the loans, this is very well balanced and very well managed. Almost 85% of our banking sector's loans goes to the corporates. Almost half of the loans goes to the big companies. 1/4 of the loans goes to the SMEs. The 1/4 of it goes to the consumer loans. And consumer loans and credit cards is the main consumer loans, individual loans. Because of the recent macroprudential policies that limit the credit growth, affects especially in big companies' loans. In 2023, big companies' loans to its share of the big companies' loans almost 50%. In the recent years, 47 and 48% of big companies because of the credit growth limit macroprudential issues. The NPL ratio we experience because of the lower growth rate under the potential rate. We experience some NPL ratio almost 2.9%. It is very good position, very good when we compare to the previous manageable area. The consumer side experience higher NPL ratio when we compare to the corporate loans. Capital adequacy ratio 16.6%. It is very good position when we look at the standard ratio. BRSA says that all the banks have to be covered 12% in capital adequacy ratio. We experience some decrease in capital adequacy ratio because of some measurement defined by BRSA. The Turkish banking sector equity is almost 100 billion US dollar. In the last of my presentation, we talk about the average return on equity in Turkish banking sector, almost 26%. When you look at this data, it can be very good position. But when we compare to the inflation rate, our recent data shows that our Turkish economics inflation rate 31%. The banking sector return on equity is under the inflation rate. But the recent years, because of the inflation rate, the gap between average return on equity and inflation closed, but under the inflation rate. The main subject about this, the macroprudential policy is very important role on this process. Also, credit growth limit is badly affect and profitability issues. Thank you for your attention.
Good morning from Istanbul. I'm Elif Berna İlhan. It's a pleasure to be here today. Before I start, I would like to thank Asian Bankers Association for this opportunity. In the next 10 minutes, I would like to give you an overview of Turkey's vision and preparations for COP31, which stands for the Conference of the Parties to the United Nations Framework Convention on Climate Change. It is the world's largest annual climate conference, will be held in Antalya in November. I want to start my presentation right now. I will focus on four interconnected areas: Turkey's COP31 vision, its climate policy and green transition, the role of climate finance, and finally, the preparations and contribution of the Turkish banking sector. We can start with global context. COP has become the most important platform for global climate diplomacy. Over the years, the focus of this conference has evolved. While earlier COPs were largely focused on establishing commitments and frameworks, we are now talking about entering a new phase. The key question is increasingly not only what should we commit to, but how do we implement what we have already agreed. Following the first global stocktake under the Paris Agreement, it has become clear that the world is still not on track to achieve the goals of Paris Agreement. Therefore, the global climate agenda is increasingly moving from ambition to implementation. And this is the context in which Turkey will host in COP31. Turkey's vision for COP31 is built around three key principles: dialogue, consensus, and action. These principles are intended to guide the presidency towards an inclusive, balanced, and results-oriented COP. Turkey has also positioned COP31 as an implementation COP, or COP of the future. The objective is to move beyond commitments and statements to intent and focus on translating existing commitments into tangible, measurable, and trackable results. In other words, COP31 aims to connect climate ambition with implementation on the ground. To understand Turkey's COP31 vision, it is also important to look at the country's climate policy and green transition agenda. Turkey is undergoing a significant transformation towards a lower carbon and more climate resilient economy. This transformation includes developments such as Turkey's nationally determined contribution, its long-term climate strategy, the development of national emissions trading system, and increasing alignment with international climate policies and market developments. But the green transition is not limited to the energy sector. It requires transformation across the wider economy. Each transformation creates significant investment areas. And this is where climate finance becomes particularly important. Within this context, COP31 presidency has identified a number of priority areas under the COP31 Global Climate Action Agenda. These include electrification, zero waste, resilient cities and infrastructure, sustainable agriculture, green industrial transformation, and strengthening resilience. What is important from a financial sector perspective is that these areas are not only policy priorities. There are also investment priorities. The transition will require new infrastructure, new technologies, business model transformation, and significant capital expenditure. So if we want climate commitments to translate into real-world outcomes, we need to ensure that the necessary financing is available. This brings me to one of the important initiatives within Turkey's COP31 action agenda, which is Climate Implementation Bridge, or CIB. The rationale behind this initiative is quite simple. Today, there's still a gap between climate commitments and actual investments. Countries have national determined contributions and national adaptation plans. However, translating these commitments into concrete, well-prepared and investment-ready project can be challenging. The climate implementation aims to help address this gap. Its objective is to support countries in translating climate commitments and adaptation plans into actionable and investable project portfolios, helping climate finance reach the ground faster and more effectively. Importantly, the initiative is not intended to simply create another source of funding. Rather, it aims to strengthen the existing climate ecosystem by connecting projects, institutions, financial resources, and relevant stakeholders. In this sense, the climate implementation bridge can help connect climate ambition with investment opportunities. This brings us to the role of financial institutions. Banks connect capital with the real economy. They finance companies, infrastructure, households, and investments. For banks, climate change is therefore increasingly both a risk management issue and a business opportunity. On the risk side, banks need to consider physical risks such as extreme weather events, as well as the transition risk arising from regulation, carbon pricing, technology, and changing market preferences. At the same time, the transition creates significant financing opportunities such as renewable energy, green and transition finance, circular economy investments. Banks can therefore play an important role not only managing climate-related risks, but also in supporting their client transition journeys. Within this background, Turkey's preparations for COP31 go far beyond hosting conference itself. The presidency provides an opportunity to bring together public institutions, businesses, financial institutions, investors, international organizations, and other stakeholders around a common implementation agenda. And this is where our role as the Banks Association of Turkey becomes particularly important. As soon as we learned that COP31 will be held in Antalya, we started monitoring developments that could affect the banking sector both globally and in Turkey. Our objective has been to understand the issues that may shape the sector, bring together public and private sector representatives, facilitate knowledge sharing, and explore how the Turkish banking sector can contribute effectively to the COP31 process. As part of this work, we have been engaging with our members to identify the themes that are most relevant to the sector. Based on this discussion, we have started developing content and initiatives around priority themes. We have been working across several areas. First, we are preparing Turkey's Sectoral Sustainable Finance Outlook report, which will be available on public soon. Through this report, we aim to provide a current snapshot of the sustainable landscape in Turkey. Second, we have been holding meetings with public institutions. These meetings allow us to follow developments closely, exchange views with policymakers, and keep our members informed about the evolving climate policy and finance agenda. Third, we are engaging with national and international stakeholders to exchange knowledge, establish partnership, and explore opportunities for collaboration and potential activities around COP31. Through these activities, our aim is to strengthen the connection between the climate agenda and the banking sector. Our engagement has also gained an additional dimension through our role within COP31 ecosystem. The Banks Association of Turkey has become a strategic partner of finance of the COP31 presidency. This is an important opportunity for us to contribute to the dialogue on climate finance and strengthen the connection between the climate agenda and the financial sector. In addition, the chair of the board of the Banks Association of Turkey has assumed the role of climate finance ambassador for COP31. We see this role as an opportunity to strengthen dialogue between public authorities, financial institutions, and international stakeholders, and to highlight the importance of mobilizing finance for climate action. And this brings us back to the central message of Turkey's COP31 vision: dialogue, consensus, and action. Dialogue is essential because the transition requires cooperation between governments, businesses, financial institutions, investors, and civil society. Consensus is important because climate action needs to be inclusive and balanced, taking into account different economic realities and development needs. But ultimately, we need action, and action requires investment, and investment requires finance. And this is why the financial sector is not simply an observer of the climate transition. It is the one of the key mechanisms through the transition can actually happen. So to conclude, I would like to leave you with 4 key messages. First, COP31 represents a shift from climate ambition towards implementation and measurable results. Second, Turkey's COP31 vision is built around dialogue, consensus, and action, with a strong focus on practical implementation and the transition towards a lower carbon and more resilient economy. Third, climate finance will be the heart of this transition. Initiatives such as Climate Implementation Bridge highlight the importance of connecting climate commitments with investment-ready projects and available finance. And finally, for Turkey and for Turkish banking sector, COP31 represents a unique opportunity to showcase progress, strengthen international cooperation, and contribute to shape of the future of sustainable finance. As the Banks Association of Turkey, our aim is to support this process by bringing together our members and stakeholders, developing knowledge and data, facilitating dialogue, and strengthening the role of the banking sector in Turkey's green transition. Ultimately, the success of COP will not only be measured by what is agreed in Antalya, but by what happens after Antalya. That is where implementation, investment, and finance will truly matter.
That was a very comprehensive presentation, good numbers, good explanation of both of you. And I think now is the time to see what the audience is thinking about the situation in Turkey and about probably about COP meeting. Now, let's go to the Q&A section. And we have one question here. It says, I think this is for you, Ümit. What is the bank strategy on recovery and collection during this macroeconomic downside?
I mentioned before the Turkish banks is very experienced for risk management. In the economic downturn situation, the banks act very prudent in this situation. The first step for the banking sector in the recent years, raising their provision. The special provision to NPL ratio in Turkish banking sector, almost 80%, is very prudent for the Turkish banking sector. Also, another important strategy is for the bank sector in economic downturn period, loan restructuring process. The banks gives their customers loan restructuring opportunities. It helps to handle in this situation in economic downturn period. Because of this things, our balance sheet still be good position in this period. Also, NPL ratio lower, affected badly from the economic downturn process. One of them is higher provision and restructuring loans. The two main strategy.
So I think that they are adjusting duration to a
Yes.
shorter period.
Yes.
What is the duration now?
The duration of our loans almost 5 years, but we give some opportunity our customers longer duration for the loans, and because we think the recent development is not permanent, after that we will see very good days. So all the banks helps their customers in this process.
I mean, seeing the inflation process is lowering. You have already a few years on downtrend.
Yes. 2024, our inflation rate reached to 70%, and we are now 31%. In the recent months, the decreasing in inflation rate a bit limited because of the external shocks, but in the near future, in the medium term, we expected to still continue the disinflationary process. At the end of this year's, our CPI inflation is almost under the 30%, and next year we goes to the under 20%, and the medium term we send back the one-digit inflation rate again.
That's a good news. Now let's go here to Jody Peralta. She has a question also related to the inflation. Says, what changes in customer behavior does inflation create? And how do these behavioral changes affect the bank's compliance risk? It's a bit technical question.
It's a bit different, hard questions. The main behavioral change in customers goes off in the higher inflationary process. The main changes in customers' behavior goes to the TL. They prefer US dollar, gold, and they expense their money for car, house. They don't choose the TL. It is very bad news for the Central Bank of Turkey. After that, the higher and tighter tighter monetary policy, and the Turkish customers turn back to the TL, and the balance sheet of both the banking sector and real sector goes well. The main change is for customer is turn back to the TL.
Let me go a little bit further here. In the past, I saw these Latin American economies where during high inflation, people start using the dollar. And some of them never went back, like Ecuador, Salvador. Do we have a risk of that situation in Turkey?
No, I don't see any risk in this situation because of Turkish economy more predictable, more sustainable, and more resilient when we compare to the Latin economies. So the Turkish households and Turkish corporate turn back to the TL. If we will not be experienced very hard external shock, we don't expect any deterioration in TL and the dollarization issues in Turkish economy.
Good. Now, let me see. I have a question here for Ms. İlhan. What can we expect from the financial sector during COP31? And what will TBB be doing in Antalya?
Okay, we actually preparing the several action around COP31. We will submit an application for finance-focused panel in Blue Zone. And we aim to get together different perspectives from financial sector representatives. Also, we are planning a reception during Finance Day, but it will announce when things get clear, I think.
Okay. Now I have another question here, going back to Ümit. Going back to your numbers, it says, you mentioned the recent intensification of regulations and macroprudential measures in Turkey. Noting that this inflation process is playing right now, because we saw the numbers very clear. By this perspective, could you provide some insight into the outlook for the banking, since, as you said, they're losing money? What is the outlook here for the banks?
As a Bank of Association of Turkey, every year we collect some estimation from our members. Last year we collect for expectation for 2026. All the bankers, all our members thinks that this year will be better than previous year. After that, we experience some geopolitical shocks from abroad. We in the we lost our first 3 months, first quarter, because of these external shocks. But still, we are good position. If we reach our target in inflation, the banking sector balance sheet will be better position in this period. As mentioned before, at the end of the year, we expect in inflation we will be under the 30%. It's still high, but better when we compare to the previous years. Its effects very good for if the lower inflation rates means for the banking sector very good, well balanced balance sheet, more profitability. At the beginning of the year, we expect a higher return on equity than inflation rate. In the third quarter of this year, we still under the inflation rate, but at the end of the year, we will almost same level of return on equity and inflation rate. If the banking sector can reach the higher return on equity when compared to the inflation rate, it affects their shareholders' equity and capital adequacy ratio, because the banking sector accumulate their shareholders' equity via their profit. The banking sector needs more profit to the more strong shareholders' equity.
Yes, I have a question from Farsana. The first part I think we answered, but the second part is interesting because there is a nuclearization of funds into the corporates. And then she talks here about the SME and the asset quality pressures in SMEs and retail loan portfolio. Basically, what's the policy here on this disinflation process for the asset quality of the SMEs and consumers?
Historically, in Turkey, NPL ratio in SMEs and retail loans higher than other loans. Historically is correct for Turkish economy. In the recent data shows that NPL ratio in SMEs and retail loans is higher than the another loans type. SMEs is very important for Turkish economy. The almost 98% of companies in Turkey is SME. Also, it's very important for employing employers. But I mentioned before the credit growth limit. The SMEs loans don't have any limits for the growth, because we don't have any deterioration. We don't see any deterioration SMEs loans. But retail loans, the BRSA and the other authorities look very closely in this area. In this process, the structuring is very important for this area. If there are any big deterioration in retail loans, we experience another measurement, but we don't expect any measurement in this situation. The banks thinks that still manageable. We are still manageable area for the NPL ratios.
Okay, we are over the hour, but maybe we have one more question. Here you have I don't know if we can interpret this question correctly. What is the current situation in terms of deposit mobilization?
The main things about the deposit side is the central bank's target. Because of the TL deposit, the total deposit target for the banks, it's affect everything for the banking sector. It causes more funding cost, the higher deposit ratio. In Turkish banking sector, deposit average maturity of deposit almost 3 months. It's a bit closer, but after 3 months, people take the money and give banks again. But we have long maturity in deposit. The main important issue is for deposit mobility is central bank's target for the banks, but we are not in dollarized situation for the deposit. I mentioned before TL deposit to total deposit ratio almost 62% in Turkish banking sector.
I think inflation is the main factor in this profitability, and it's
I
went
think
down.
if we reach the lower inflation rate, such as one-digit inflation rate, the Turkish banking sector asset size to GDP ratio again reach the 100%. But the first job for the Turkish economy reach the lower inflation rate, both banking sector and real economy, I think.
Good. So now that we are very clear on this, I don't know if the two of you would like to say some closing remarks. Ümit, you can go first, and Elhan, you have also your minute.
Thank you very much. We believe that stronger cooperation between our banking communities can make important contribution to expanding trade and investment. I hope that today's webinar has provided useful overview of Turkish banking sector and Turkish economy. While opening the door for further discussion and new opportunities for collaboration. On behalf of our institution, our association, I would once again like to express my appreciation to the Asian Banking Association for organizing this webinar and giving us the opportunity to exchange our views with such a distinguished audience. I would also like to thank all of your participation, your interest, and your valuable question. Thank you again. We are looking forward to another webinar or something like that. Thank you very much.
Ilhan, please.
I agree with Mr. Ümit with his speech. I would like to thank to you, Asian Bankers Association, and all participants. And like I said, we will be in Antalya in November, and I hope you will find a chance to come in there, and we can meet face to face and maybe we can do some collaborations in there. And thank you for this opportunity. Like I said, if you have any further question, feel free to reach out to me with my emails. Thank you.